With so many people coming into the market and even people in the market, I think it's really important that we talk about this. These are my 10 kind of commandments for crypto trading that I'm going to highlight in this video. So make sure you guys stick around until the end of the video. I'm going to break things down. And these are just good reminders, regardless if you're brand new to crypto, regardless if you've been in the market for a little bit, or even if you're a seasoned investor. I think you're going to glean something from this video 100%. So all I ask, guys, smash that like button. I want a lot of people to see this video because this could be an organic video that people watch over time, depending on whatever cycle we're in. And with that being said, we're going to get into the top 10 and what this kind of looks like across the board. But real quick, I do have to tell you guys about my free newsletter. Sign up, tons of free alpha. We're looking to ramp this thing up. I'm going to give you guys a ton of great data points. It's a completely free newsletter. I just want to give back to my community. So sign up for the newsletter, link down below in the description. And let's get into it. I do have a chart pulled up here. This is XRP's chart. I'll kind of reference this a little bit when we're going through these things. But first things first, when it comes to trading tips, number one is risk management. First and foremost, you never historically want to risk more than like 2 to 3% of your capital on a single trade, unless you see something that is just completely blowing you away. And even then, you want to use stop losses, stick to them. Emotions wreck portfolios, guys. Keep an emergency cash buffer in cash in case markets crash. Always keep a stable coin position. This is how I manage risk, okay, all the time. Number two is position sizing. Small, consistent trades beat all-in gambles. I never want to full port, go all in on anything. Never. And when I do, scale into an asset, I slowly buy in. And then I slowly come out too. Ladder buys, ladder sells, rather than guessing the top or the bottom. Nobody's that good to pinpoint the tops and bottoms of these charts. Number three is diversification. And not just diversifying your portfolio, but diversifying with a purpose. Hold a core allocation in strong assets. For me, that's Bitcoin, Ethereum, XRP. And then I use the next kind of chunk of capital that I have for altcoins, like whether they're in the DeFi space, RWA, or AI tokens, and then into meme coins and small caps. Don't ever diversify into like 100 different coins because now you don't have enough capital to really make big gains. And stick to projects you understand. It's very similar to the traditional side of investing. Invest in things that you understand, invest in things that you use, right? And you're going to do really well. Number four is have a trading plan. Decide before entering, like, what am I buying? Where am I going to sell it? What's my stop loss? What are my goals here? Like, make a journal of your trades and learn from your mistakes. You can go back and look at these things. Number five, avoid the noise, avoid the FOMO, avoid the hype. Chasing pumps usually ends in getting wrecked. By the time you hear it on TikTok or mainstream media, insiders are probably selling, dumping on your heads. That's just how it is, okay? Number six is time horizons matter. Is this asset that you're getting into a long-term hold, right? Now, if it is a long-term hold, you're focusing on dips, not daily noise. And for example, like XRP is a long-term hold for me, a long-term play, and I have multiple positions open. So when we dip down to 275, 270, I know this chart like the back of my hand. I got in this position down here at like 272. Now we're back up to 285. It's a long-term play for me, right? Short-term trading is a little different. Use technicals like support and resistance, use RSI, use the MACD, and match your strategy to your time availability. Day trading is not for everyone. You could be a passive investor and still do really well in crypto, but you've got to draw a line in the sand and ask yourself what your goals are. Number seven is crypto runs in 4-year cycles, at least right now. Now, the 4-year cycle could be broken, but the trend is our friend until it isn't. So be cautious at euphoric peaks and be greedy during fear, meaning buy in the bear market, sell in the bull market. You're never going to lose keeping this strategy. Number eight is stay updated. Track the news on ETFs, track the news on regulations, partnerships, token burns, tech upgrades, token unlocks. All of this stuff matters. It's why you need to follow channels like this because we're on top of all of that for you guys each and every day. And a major ETF approval or layer one upgrade can spark huge moves in the price, and you want to be able to take advantage of that in real time. So stay up to date. Security is non-negotiable, guys. This is number 9. Use hardware wallets. The Ledger is something I use. I also use the Treasure. For long-term holds, you want to keep that stuff on hardware wallets. Never leave big funds on exchanges, and never click links. Just literally don't click links. And look out for rug pulls if you're in the meme coin trenches. And number 10, especially in this market right now, you've got to think like the institutions. Big money rotates. Bitcoin to Ethereum, down to majors, usually to Solana, AVAX, XRP, then into mid caps, then into meme coins. Follow the liquidity, and don't fight against the trend, guys. Don't fight against the trend. So the best traders protect capital first. They ride opportunities, and in crypto, survival equals success, guys, because cycles reward patient investors, and that is the main takeaway. I appreciate you all for watching the video. Let me know your thoughts down below. We'll see you guys in the next one.